Hey, happy Friday. Joshua Phillips here at Churchill Mortgage coming to you with another market update. And it's been a good week for mortgage rates. So it is March 22nd, 2024. I can't believe we're almost through the first quarter of the year. And you know what? As I've been saying, mortgage rates are a roller coaster and we are totally seeing it. So what you're looking at here, if you haven't paid attention to these charts in the past, I've been sharing this is a mortgage-backed security chart. And I do a tutorial that you can watch. I'll leave a link below on that tutorial. But if you just want to get the cliff notes, just know that green is good, red is bad, and the higher the security price, the better mortgage rates are doing, and the lower the security price, the worse mortgage rates are doing. So, gosh, if you're looking at the last quarter, which we're looking at right here, it's just been a roller coaster up and down. 2 weeks ago, we were saying, hey, things are improving. Last week was a pretty terrible week. This week, guess what? We're improving again. So, and these are narrow changes. I mean, rates in the last, 30, 45 days probably haven't gone up or down more than about 0.25%. We're moving in a narrow range here with mortgage rates, but hey, always love to see the green, and this was a good week. We've continued to kind of bounce, so I'd love to see next week get better and the next week get better and kind of get to some of the best rates we've seen this year, but we're just not quite there yet. So why did we have a good week? Well, it's all about Fed Chairman Jerome Powell and what the Fed is saying. So this was the headline on yesterday, is that Powell says the Fed is not far from the point of cutting interest rates. Now, do keep in mind that the Fed fund rate is not exactly the same thing as mortgage rates. There is a loose correlation. But think about this. The Fed has not raised rates nor cut rates the last 5 meetings, and yet mortgage rates are about 1% better than they were last fall. So it's not like we're just moving in step with whatever the Fed does. We've seen mortgage rates improve from 6 months ago, and yet the Fed hasn't actually cut the Fed fund rate. So it's not all about the Fed and the Fed fund rate, but that is important. And while they've delayed cutting the Fed fund rate, it is looking like they're still he's saying 3 Fed cuts this year, which should mean hopefully that mortgage rates will be improving. So that's the latest news. It's pinging back and forth, good week, bad week. If you're kind enough to be watching these each week, it feels like maybe I'm going to be repetitive. Go back and watch what I said 2 weeks ago. But I am hopeful that we will continue to see the bounce and continue to see rates improve more long term. That's what we're waiting for. That's what we're all hoping for, as we see rates maybe solidly back in the 6s, where we'd like to be this year. So anyway, if you have questions, if you want to talk about your specific scenario and your specific interest rates, happy to talk with you about that. Happy to talk with you about paying points and buying the rate down, things like that. So just let me know. Again, Joshua Phillips here, Churchill Mortgage. Have a great weekend.